Welcome to another Tax Talker. Thanks for clicking. I do appreciate it. This is the state of 1099s in 2025, including the changes from the One Big Beautiful Bill and what your business can expect in terms of receiving 1099s and issuing 1099s for 2025, which you'll have to do in January of 2026. And of course, we'll have some common mistakes and things to watch out for along the way. Let's get into it. Of course, we always like to start with some basics. Remember, a 1099 is just a mechanism by which the IRS obligates the payor to report the amount of money they paid to a payee, the vendor that they paid. And this is true for banks reporting interest or the investment 1099s you get, and of course, business to business, business to a sole proprietor. This is a way of tracking these independent contractor payments, rent payments, interest payment, dividend payments. All this gets wrapped up into the 1099 infrastructure. In practice, it can often feel like the pesky little fly of the tax world, especially for my small businesses that are going through and looking for, what did I pay to the handyman and whatnot. But of course, these can be millions of dollars in terms of the actual amount of money that gets reported on 1099s every year. So when you add it up, that's the incentive for the IRS to require these things. It's a way of catching unreported income. And also everyone from business return, including just on your personal return, if you got a Schedule C or a rental property, you answer a question on your return saying, did you have to file any 1099s? And then if yes, did you file them? While it's unlikely the IRS is going to come looking at your return just because it suspects you missed 1099s, if they're already looking at your return, it's really easy to throw the book at a breach of compliance on 1099s. It's, I think, $500 per 1099 per recipient, so that can add up very fast on missed 1099. Now, changes from the One Big Beautiful Bill. There are really two main ones, and they're going to be on the receiver side and then on the recipient side. So on the receiving side of 1099s you're going to receive, they finally fixed this 1099K issue. Back in 2021, as part of the American Rescue Act, an effort to crack down on what people felt was underreported 1099 income, 1099Ks were going to go from a $20,000 threshold to a $600 threshold. So a huge shift in what's reported on 1099K, and that's your third-party payment processors, your credit cards, your Venmos, your PayPals. It's an unusual part of the 1099 world because usually it's the person who's paying the money, issuing the 1099 to the person receiving the money. In the 1099K world, it's the one where it's a third party, the processor of the payments, that's issuing it to the person who's receiving money. So that was a change that was passed, going from $20,000 to $600, but that was delayed in implementation. Each year there was wailing and gnashing of teeth. At one point, I think it was 10,000, and then it was 5,000, and they've kind of danced around with different delays on this one. But the good news is, from the bill, it's back to $20,000 and 200 transactions. If you're over that threshold, then you're going to receive a 1099K. This will mean a lot fewer 1099s in circulation for businesses, and as we'll see later, it's just going to reduce the risk of missing a 1099 or having issues with what 1099 income is getting reported to you versus what you think your business actually made. On the other side, the flip side of things, for those issuing 1099s, small businesses, you typically issuing a 1099 miscellaneous, most commonly rent on that one, or a 1099 NEC for your non-employee compensation, independent contractors. That is a $600 threshold, and that will stay $600 for 2025. But in 2026, it does get the bump to $2,000 and is indexed for inflation. So that is a significant compliance relief on those 1099s. Let's quickly go over who do you need to send 1099s to. This has not changed. This has been around for a while, but let's go over a little refresher course. You're issuing 1099s for most small businesses. They're looking for rents paid and payments for services rendered. That'll include your independent contractors, but also your IT person, your website design, lawyer, your accountant, your handyman, cleaning and maintenance. On these 1099s, you're looking for payments over $600, and you're issuing those to payments to non-corporations. So that you can cut out then all your big box stores, big tech or software companies. Where the gray area comes in is when you don't know, and technically you should have a Form W-9 on file for every vendor that you pay money to. That's what the IRS will ask for. to say why you didn't issue a 1099. The W-9 says they're an S Corp or they're a C Corp. And so I did not have to issue one to them. It's good practice. Just download the W-9 each year, one-page PDF you can get, and then send it to a vendor when they're new. And again, even if they're a S corporation, that's subchapter S corporation, which many small businesses are, it's gonna be hard to know, and that's why you would need to issue a W-9 to find that out. Businesses with Inc. in the name, that's not going to hold up with the IRS saying, hey, they have Inc. in the name, but usually it tends to indicate that they're a corporation, though it's possible that there's been a shift and they just didn't bother to change that. 1099s are pretty easy to issue through a service online. If you're using QuickBooks, you can do it through there, but there's any number of online systems that can be a little annoying that first year when you got to log all your vendors in. But after that, it's pretty quick. It's usually not very cost effective for most accounting firms to do it. And there's many online services that can do it pretty darn cheaply. Let's talk quickly about some frequent misses here on 1099s. In terms of the 1099s you receive as a business, you want to total those up. And that total revenue number, that should be at least as great as the number you're reporting for gross revenues on your tax return. That's what the IRS computers are going to do, is they're going to aggregate your 1099s reported to that employer identification number or social security number, and they're going to expect those total revenues to be there. Now that, of course, is not going to reflect your actual income. For instance, if you're a realtor and you receive a 1099 from your broker there, it's frequently going to have your gross income, but it's going to have a bunch of deductions for the advertising that the agency does, certain fees and commissions to them. And so that gross number still needs to be reported on your tax return, but you just want to make sure you're reflecting those underlying expenses as deductions with the rest of your expenses. So in your QuickBooks software, whatever you're doing accounting for, frequently what I'm seeing is people are just recording the net cash they received from a vendor, and sometimes there's already expenses that are taken out of that directly, especially when there's some sort of third party that they're an umbrella under. And it's a real pain. If the IRS catches this, they're going to go ahead and change your return for you. They're going to say, oh, don't worry, we caught this. We found extra income. But they're not going to find that extra expense. So they'll send you the notice, and then you could look at it and say, okay, they're right. I could have reported more income, but I got more expenses. You're going to have to go amend your tax return, probably pay some fees to whatever software, or if you have a tax practitioner, to amend that and get we call that grossing up. You're grossing up the income to match the underlying expenses. Sometimes the 1099 is wrong, or it's just issued to the wrong social security number or employer identification number. Maybe you're now an S Corp, but you were a small business with just your social security number, and you got a 1099 to your social security number. You're gonna wanna report that 1099 still on your personal return, and then put a deduction, canceling it out, saying nominee income, with the employer identification number that income is actually being reported under. So this is another way to make sure the IRS computers aren't catching this and just auto-generating a computer notice. That's what you're trying to avoid. It's not that someone at the IRS is actually going to cross-reference those and catch it. It's to avoid the computers catching it for the IRS and just churning out a notice. That's the Tax Talker for today. That is the state of 1099s in 2025. If you missed it, my recent video was on the 2025 tax changes for businesses. I've also done a individuals only one. We've done a explainer on 179 and bonus, and I'd love to get a comment from you guys asking what you want me to talk about next, whether it's the one big beautiful bill or something else. Thanks for watching. We'll see you next time.